Welcome to Inside Startup Investing, the only podcast where you can invest in every guest. On this episode, I will be speaking with the founder and CEO of Pytheas Energy, Josh Zuker. As a reminder, if you like what you hear on today's episode, you can invest in Pytheas Energy on Start Engine, regardless of whether or not you are accredited with a minimum investment of $500 until August 31st, 2026. You probably know the saying, one man's trash is another man's treasure. Pytheas Energy is the epitome of this moniker as they apply it to the oil and gas industry. You see, in the oil and gas space, the big companies come in and pump everything they can from a field of oil wells as quickly as they can. Then they jump ship and move on to the next gushing wells. But what's left behind is a set of wells that still yield opportunity for those wise enough to assess the wells and optimize them. Pytheas is using their data and AI tech to identify overlooked wells that have been left for dead, but can still yield treasure for those smart enough to see it. Now, it's important to note that the oil and gas sector is an incredibly old school industry, one where adoption of tech, the likes of what Pytheas is building, is far from quick, if it happens at all, which means Pytheas has an opportunity to build a really large business optimizing the scraps of the big time players to build an important player in the energy space. And this is a two-sided play, where Pytheas can both generate consistent returns by identifying, investing, and optimizing in these overlooked wells, as well as eventually licensing their tech to other operators who want to modernize their oil and gas playbook. And with over 3.5 million unplugged abandoned wells in the United States, the opportunity for Pytheas is fairly endless at the moment. Applying real technology to old school bureaucratic industries and finding overlooked, underpriced assets that can drive real investor ROI is a winning playbook. They have early signs that their playbook works, and I am excited to see if they can scale this up. Reality is, these abandoned wells are just being trashed when we can generate more energy from them, which is a positive societal impact. Because the more we get from these abandoned wells, the less we need to dig into new wells and land. It's a win-win. So if you like old school industries like me that can be reinvented by innovative technology, I think you'll enjoy this conversation. Now let's get on to the show and welcome Josh. So listen, for those of us who don't know you, tell us a little bit about your background and how you came to found Pytheas Energy.
Well, I'm actually the financial guy, born and raised in Chicago. How I wound up in Texas on a cow patch is a long story. But fast forward to my investing years, made a little bit of money, moved out to California from Chicago, raised a family, and then kind of wound up in an investment in the oil and gas business. And the investment turned out to be horrible. It was basically one day call my wife and we're going to lose all our money and the investors' money unless I stay and figure it out. Now, I'm smart enough to know that I didn't know anything about the oil business, nothing. But I knew the guys that I was with also knew way less than I did. And I'm a smart guy, and I ask a lot of questions. I'm a very curious guy, and I want to know why. And I look down at my feet, and I see oil coming out of the ground. I'm like, well, there's oil coming out of the ground. There's got to be a way to turn this into a business. And that's literally how it started about 6 years ago. And then kind of just went through. I said, everyone said, how are you going to do this? I said, well, look, 100 years ago, some guy came out here. He had no YouTube, had nobody to talk to, no regulatory, no rail commission, no historical, anything, right? So he figured it out. How hard could it be? Very hard. Very hard. The hardest part is getting the right people to listen to, like in any business, right? Or you have to find mentors. You're starting any business, and I'm a lifetime entrepreneur, but any business, it's 5 years. It takes you 5 years to figure out anything. Maybe even your business, right? Podcasting or your Kingscrowd or whatever you're doing, right? So, but I learned pretty quickly that there was a lot of locked up value in these wells, and what I was looking at really was I wound up in a place it's called stripper wells, which are just, it's kind of like, I don't know if we all remember when we were kids at the land of forgotten toys, right? Where people go and and I'm a real estate guy. So I had to turn this whole thing into real estate because I grew up in mortgages and doing real estate my whole life, right? Or my working life after college. So I understand how real estate worked. I understand how deals worked. I understand about raising money and phone rooms, and I did all the good stuff at the right time. I have great timing in my life, and I just kind of went through this whole process of figuring things out and like, how can we make this happen? And I got out there and I see these wells and I ask these questions, and these wells are beat up. It's like the Tin Man from they're frozen, right? From Wizard of Oz. And I'm like, how do we fix this? And then, okay, here's how you fix it. And I was like, okay, well, how do I get that? Oh, it could be no blur on. How do I get that well to talk to this phone? Because I don't want to sit out here every day, right?
Yeah.
And watch these wells and wait for them to break. And that's literally what it came from. So and people said, oh, well, that you have to be Amoco or ConocoPhillips or some big company where it's, there was really nothing even 6 years ago. There was no AI, right? But there was monitoring. And I knew that I'm like, well, if I could monitor the well and I could get the well to tell me what's going on, how's it feeling, right? That's really what it started. And really, I just wanted to be able to turn the wells on, turn the wells off at the proper time. And then I learned I'm a pretty connected guy when it comes to like just connected to the earth. I'm a bit of a deadhead for most of my life. So I really understand kind of like everything. We're all connected. Everything's connected. And I realized really quickly that the formation's connected. If I can get Mother Nature, right? It's metal against salt water. It's us against her, always, right? So how can we work in a symbiotic relationship for that? So I just took a little different. You can't use brute force in money. You can, but you'll waste a lot of money, right? You burn a lot of money. And there's only a finite amount of money. There's more oil than we'll ever all need. Everything they tell you is just that it's rare. It's not rare.
So if I boil down what you did is you basically went and found these wells that people had kind of given up on and said,
Abandoned.
there's still opportunity here. We can make something of this. And it's all about figuring out how to extract value from it, aka oil. So just at the most basic terms, why did they give up? What about the well wasn't good? And why are you able to win with that well?
Well, two things happen in the oil and gas business, right? So oil and gas, as you guys see right now, what's going on with oil prices, right? Oil, it trades in a range, right? So there's a cycle. It's typically 10 years. The problem is nobody knows you're going to have 9 good years, 1 bad year. The other way, 9 bad years, one, or
Yeah.
50-50, like you don't know, or is it going to, how many times is it going to go like that in 10 years? So what happens is typically, like most businesses, it's the commodity price is what dictates how successful people are. And then, so if they overspend or over leverage, they go out of business if the commodity price goes down. COVID knocked this place totally out, really. And that's when I came in right after COVID. But prior to that, there's also management companies, right? People, how they manage stuff. And then the other thing is when the wells were drilled, specifically this 8,000 acre, 800 well or 800 plus well field that we're on now, which is right outside of Austin, is a shallow well field. When was it drilled? What was the technology? And then what did they extract, right? So you use science and petrophysicists to say, okay, well, you have, I don't know, millions of barrels in the ground that can be recovered over time, long period of time. And how much did they take out? It's a little bit of a guesstimate, but it's an educated guesstimate, right?
Yep.
So that's so you put all these things together, and then that's kind of say, okay, well now that's good, right? So that's kind of why you pick these wells. And the good news is the acquisition is right. You make money on the buy in any business, right? Not really what you sell, right? So and then my job is to make money, really bringing, controlling the cost because I can't control the price. So my job was, how do I control the cost? Well, get rid of the people and get computers to do it, really. And no one was doing it really in this, because these are small wells. These are not big producing wells. So there really wasn't something there. So I built something for me, and it's turned out that it really works, and now other people want it, which is another part of this business, and we'll be announcing that later.
You have kind of this area with all these wells on it that you can extract value from. Is that the end game? Let's extract as much value from this, and that's Pytheas? Or is it, let's go find more fields like this and continue to expand?
Well, the key is two parts of it. Number one is for example, there's 1 million stripper wells in the United States available for you, me, anybody to go put whatever money you want into. Number one, which one do you do? There's not enough money to do them all. or else they would
Right.
have done it. So you say, okay, so it's almost like a needle in the haystack. So the first part of the technology, which was our Pytheas AI, was let's do a needle in a haystack. Kind of, can we find the needle in a haystack? I'm going to spend $40,000 to fix a well, for example.
Mm-hmm.
Which one do I do? And you're not always going to be right. This is a probability game. So I built a probability model to tell me which one, what was the probability of success. Also, spend money. Can I figure out if I should go move forward at 5,000, right?
Mm-hmm.
When do I take money off the table? It's a little bit of a gamble. It's kind of like going to the casino a little bit. You kind of want to, and then when can I play with the house's money, right? So that's kind of how that one works. So that's the first thing that we wound up doing. But then I realized, okay, so I extract a barrel out of the ground. And then once I extract that barrel, I sell that barrel.
Mm-hmm.
It's over. I have to go get another barrel. But what's the data say? No one looked at it from a data play, right? No one said, this is again 6 years ago, but data was a big deal and all the whole, data world and all that was going on. And I was like, okay, what if we extract the data? What's the data going to tell us? And what's potentially the data worth in the future,
Mm-hmm.
right? And then can I get the wells to talk to me? And can I get the wells to talk to each other? Well, that was an aberration back then. You can actually do it now, right? Because of AI, which is, and that's kind of what the 2.0 is going to be about from our technology. So we're really in oil and gas. We're really a technology company that's solving the future of blockchain tokenization when clarity comes through. That's what we're working on now, and kind of accumulating the data and doing our own R&D within the data. But we don't sell the service, so we don't monetize that data yet, right? Because you're in collection phase. So you monetize it with the sale of oil.
So essentially, what you're doing is you're building a data analysis, AI-powered data analysis tool that lets you figure out what overlooked wells should I pursue and invest in, and then over
Correct.
time, you'll make money from extracting value from those wells, and then beyond that, when you have enough data, you could actually sell this tool for others to do the same thing and go after these million stripper wells.
Correct. It will be anything that's in the ground, really, right? Any mineral that's in the ground, right? So now you'll be able to use predictive modeling and geopolitical stuff. So yeah, it's just expanding so fast. Things that I never even saw are now available for people that were in my type of mineral, let's say mineral extraction business, right? But it's also really what do the investors want? What does it? This thing was built from an investor forward, mindset. Me, right? If I'm going to put my money somewhere, where would I do it, right? What are my constraints? You learn that in business school, right? What are the constraints? How do I apply my constraints? Does my money have a long tail? Does it have a short tail? Does it need to get this? Does it need, right? You have that long money, which is kind of the institutional money, where I don't know, teachers' funds and whatever. Oh, we only need 8% a year. Okay, and we'll give you a ton of it, right? A lot of strings, but you get it, right? And then there's we need fast money. Got to triple, quadruple, double, right? And then what's the mix between that? So kind of the tool does all that and allows the asset to kind of derive that from a value perspective.
From a revenue perspective, right now, are you generating most of your revenue from actually bringing barrels of oil to the surface and selling those?
Yeah, so the only revenue currently is from barrel production and sales, correct? Because we don't do anything with the technology yet.
Got it. And what's your volume on barrels per year at this point?
Well, it's really on monthly, right? So
Yep.
when you pick up a wells like this, there's a lot of regulatory challenges. Usually, when people leave, they leave it in a mess. So you have to clean up the mess, right? It's like buying an abandoned building with all the
Yeah.
code violations. Before you can have
Yeah.
anybody move in, you got to fix it all up. This is what we do. We almost do like resto mods, right? So you get an older thing, and I just put
Yeah.
all new technology in there. We go down, we clean it, we use new tools, new technology, new scanning, and we pull it out, right? So currently we're doing about 1,000 barrels, I would say every 2 weeks currently.
Wow.
But we don't really have a lot of we have about 70 wells on. When I say on, like we went over and above. We've done things there that no one's even tried to do there, right? So we're trying to solve for paraffin issues and flow line issues and kind of monitoring every drop of fluid. And really, it's really a massive R&D project that makes money, right? And then now it's about scalability. So we're in this, our proof of concept is done. So now it's when we launched on Equifund, which was in 2024, right? We were probably the fastest, crowdfund for that little section of time from what all the crowdfunding guys tell us, right? That was my first time ever doing a crowdfund. We did it at Equifund with those great guys, fantastic. And then from there, it was just really an idea on a piece of paper. It was Josh saying, hey, I've been out here. I had some wells. I kind of been doing this for a couple of years. I think I can make a go at this. I think I have a great idea. So we use that to kind of do a proof of concept and kind of acquire some assets and clean it up. Now we're into the next phase. We did a Regulation S, which is for anyone who doesn't know, it's a non-U.S. Deal. So it's like a Reg D, a Reg A, CF. People that listen to this type of stuff will understand kind of what that is through the SEC. But this allows us to get non-U.S. investors and kind of stay outside of and not commingle. And we're very successful. Almost $10 million we raised there. So now we're into more acquisition, built an operating company, and which means the guys that actually do the work. That's a sub company.
Yep.
So it's not just a holding acquisition company. We're actually doing the work. I'm actually out there. It's actually one of my shirts, but I'm actually out there with the guys doing the work. Right. So as a CEO, I'm a hands-on CEO, right? I have to get out there and do it. I've done all the workovers. I know how to dig the ditches. I know where the flow lines go. I know how the electric's set up, and I do a lot of the design. And I'm not as educated as some of the engineers are, but yeah. But that's what I do. I'm a hands-on guy.
So about 2,000 barrels a month right now. How much does a barrel go for in general?
Well, as of today,
I know it's a little funny at the moment.
It's a little high, yeah. Well, so you have to run. I'm just actually going to look here. So let's say oil price today it's probably, I think it's $90, right? It's gone. Oh, it's actually dropped a lot. Good. So hopefully that's good. I like it where it's at. It's 82 today, but it was at 94. Yep. We run our business on $65 oil, right?
Yep.
So anything over or above 65 is kind of put it away for a rainy day fund. That's how I like to run it. Why 65? 65 is the 20-year historical average of oil for the last 20. Let's assume for the next 20, it's probably going to be around the same thing. No one really has a crystal ball, so there is some guesstimating that has to happen. But if you run it there, then my goal is to really bring it up at about $20. But we also have royalty we have to pay the landowners because we don't own the minerals. We lease the minerals, and we have the right to get the minerals. And then you have taxes, right?
Yep.
So really you need to be but even $50 oil, the way I've designed it, it's profitable at 50. At 30, you're even, right? With your lease operating expense and some other stuff. So this is the way of making, when oil goes up in our business, that's when you have the chance to really make a big hit. You're going to make more money selling the assets that you find because you're finding something, you're rehabbing it. It's,
now it's ready to go.
It really is just like a real estate deal, right? So you got it, you go to the bank, hey, look what it's doing. It's not making money. I got it leased up.
Yep.
It's not worth XYZ, right? You go get it appraised, and you can sell them these things all based on PV10, based on what's in the ground. If they have their own funky little way of doing it in the oil and gas business.
Sure. So right now, if you're at about a couple thousand barrels a month at scale, where would you like that to be? And I guess I'm thinking about kind of revenue lines. How much do you want coming from, deriving oil from the ground? 1,000 barrels a day.
That's the goal for this field that we currently have. So there's 800 and I think 70 wells. Let's say 800 are probably decent. We'll wind up doing 600 of them. They're not all worth doing.
Yeah.
And they're not. It's fingerprints and snowflakes, man, to be honest with you. One well, you're like, wow, it's great, 3 barrels a day. And one, you're like, half barrel a day, no matter what you do to it. Another one, 5 barrels a day. It's a little bit of a crapshoot when it comes to that. But if you can average 2 to 3 barrels a day, which is really our goal, is to take all of our historical production, which is typically a half a barrel a day for these wells. Because what happens in our business is when you drill a well, these are already drilled, they decline. They go down, right? So it starts up maybe at 10 barrels a day, but then there's what's called a decline. It declines because it's just, unless you really are good with maintenance or whatever, this is how it is, right? It gets warm over time. So we take it after the decline where it's right there. Now can I increase that decline and create almost a new, what's called a new decline curve? And that's more of the science and the economics behind how that works.
From a data perspective, like when do you want the data AI business to become a meaningful revenue line?
To get enough data of what's going on. My idea is that the formation's alive. It's a dynamic. It's moving. It's
Yeah.
constantly being fed and it's moving. And what's happening? So the data for me is you have to really, and it's just really starting where people, other smaller operators. So again, just so you know, 80% of the oil production in the United States is provided by independent operators, not the big guys.
Mm.
And then there's the small guy, and there's different levels of independence: super
Sure.
independents, big independents, minis. They drop down, right? We're the little guys, even though we're probably the largest producer in our county, but there's not a lot of producers in the county, so we get some cool accolades there. I want the technology, which is the hardware, and the software, which is the monitoring system that we built, right? It goes to a dashboard, it's in the cloud. I want that to be broadcast across a wide, like all of Texas, let's say. And
Yeah.
I want all the formations and all the data to talk to each other. That would take years or billions to do, right? So ultimately, I could say, okay, because all the formations they're not always talking to each other, but they got to be somehow connected, and kind of figuring out how that is and what that looks like, right? But just on our field, we have 8,000 acres. Can I see, and I'm not there yet, but can I see from one side of the field to the other how is the oil flowing? Everything affects the flow of oil, right? So oil is oil and water underneath the ground. It's part of the sea. So the tide, lunar cycle, barometric pressure, surface temperature, ground temperature, different types of seasons, right? Solar, there's all these things that affect it, right? How can you predict what's going to happen?
Yeah.
Why? Well, number one, so you can lift oil for less money. And I can keep my maintenance down. The cost of metal, again, salt water, very expensive, right? We're constantly rusting, literally over time. So if I can keep my costs down from a deferred maintenance perspective and keep my lifting prices up, you know what I mean? Mm-hmm. Because everyone thinks, oh, oil and water. So an interesting fact, just real quick, and I know it's a little nerdy, but oil and water don't mix. We all have heard that, right?
Yep.
Okay, so even in the ground, it doesn't mix. But when you pull it out of the ground, it's mixed. The computer now tells me oil comes in water, oil. It's called legs. Like if you ever, do you ever drink wine and you see when the legs,
Yeah.
it's the same thing, right? So oil comes in water and oil. It goes water, oil. But you don't really know the time. But you can tell by viscosity how thick it is if it's changing. So we pump more when there's oil and less when there's water. So with all these factors, little tiny things, they all add up. And then also power usage, grid, electricity, or whether you're using solar, which we don't use yet. So all these things are all part of it.
There's been a fair amount of consolidation in the oil and gas market over the past many years, especially at the highest level, right? Like the mega providers coming together. When you think about exit for this business, is this something you want to IPO? Is this something you want to be acquired by one of the big players? How do you think about that?
Not a big player acquisition. We're the guys that we're the Sanford, if everyone remembers Sanford and Son, we're the Sanford and Sons. We're the junk guys. We like to go and get what everyone doesn't want, right? Blue ocean strategy, I learned that in business school. I don't want to go West Texas where everyone's going for the multi-billion-dollar acquisitions and all that stuff. I want us to, as these companies come together, they shed the stuff the low-level stuff, right?
Yeah.
It goes tier 1, 2, 3, 4, 5. We like the 4s and 5s are 1 and 2s to us, right? That's, so as they move their thing, Hess and Mobile and all these guys go offshore and they do all these new productions and all this stuff. We like to get that kind of stuff. So to answer your question, the plan is to IPO, right? That's currently why we're right now on Start Engine. And we also have a D going as well. And then we'll be going to a Reg A, and then from there, making that happen. Again, there's never a guarantee in this business, especially in the oil and gas business. Obviously, anything under SEC rule, there's no guarantees. We do not know what's going to happen. All I know is we're very passionate about what we do, and our goal is to potentially do that. The world has to align, right? Geopolitical things have to be great and perfect, and it's getting harder and harder to pick that spot, right, of when to do it. We just want to be ready. In the end of the day, we're adding a lot of value to the assets, so the assets are worth money, right? Which gives us the ability to go buy more assets, get better, nicer assets, right? Do a little cooler things. Again, we're fairly new, right? We just really launched the company in February of 24, and now we're just 2 years, a little over 2 years old. We're completing our second audit, right? So we're doing everything that we're supposed to do. to list the company, IPO, merge with something, do whatever those things. I've never gone through that yet, but I'd love to learn. And I think that we're a small guy company, and I'm trying to find solutions for the little guys, which is the little oil operators. So I'd love to give the people that don't have access, and I'd like to be the guy that gives people a solution.
So for those investors who are on the line, I want to give you the last word here. What do you want them to know?
I want them to know that we are on the precipice of creating something that really ties technology into this business, right? We are literally poised and will be being announced over the summer and the fall that we're ready to kind of provide the solution for blockchain, the Clarity Act, tokenization, when we're allowed to. Again, that's a very weird spot right now, right? And then just kind of tie it all to be that provider. I think we're a hardware, software provider that also owns assets because we get to see them, right, at the time. And I think that's where the biggest valuation is going to hit, but also backed by something that you can physically hold, right? Like a coin, but not a digital coin, a gold coin, a silver coin, right? I'm still a guy that needs to touch it with my hands, right? We actually have barrels, and to control the asset, to control the energy. I think energy is, we're stuck in it at this point for the rest of our lives, that's for sure, as far as we can see. You're going to need more and more and more. So we're here and happy to provide and make it less expensive to deliver that energy.
If you like what you heard on the show today, you can invest $500 or more in Pytheas Energy on Start Engine until August 31st, 2026. And of course, if you want to learn more about why Pytheas Energy scored a 3.1 out of 5 on the Kingscrowd proprietary rating scale, you can go to kingscrowd.com and search Pytheas Energy. And as always, if you like what you heard on the show today, please like, subscribe, and share our podcast wherever you listen so more investors like you can find us. Thanks for tuning in, and happy investing.